Now, talking about oil, OPEC decided to keep its output steady. The world's main oil-producing nations announced the decision in Vienna today. Let's take a closer look with Bloomberg reporter Christian Schmalinger, who joins us from the Singapore newsroom. Hey, Schmali, what was OPEC's thinking in keeping the quotas unchanged for the third meeting in a row?
Good morning, Haslinda. Well, basically, according to the press release that OPEC put out, one of the reasons, the things they were looking at was the oversupply that's in the market currently, and also what they call the fragile nature of the economic recovery we're seeing. So they decided to keep the OPEC quotas in place. They don't want to disrupt anything right now. Their expectation is that we're going to see demand recover through the fourth quarter of this year and into 2010. So by keeping the levels in place, they expect that they're going to burn off some of the inventories, and that's really what they're focused on the most, is getting some of these stockpiles down. They ideally would like to see numbers of about 52 days of forward cover for oil, and currently we're at about 62 days.
And of course, we've seen the correlation between oil and the USD. Why is that?
Well, right now people are looking at oil as kind of an asset class. They're looking to buy oil and commodities as a protection against inflation. We've seen the dollar measured in the dollar index, which measures the dollar against a basket of about 6 major currencies. We've seen that fall off about 14% since its high in March of this year. And so people are coming in, they're buying commodities to basically protect themselves from the expected rise in prices.
I'm reading some reports, Schmali, saying that perhaps there's been a large withdrawal in U.S. crude oil inventories. Is the market reacting to that?
Well, what we saw late yesterday in the U.S. was the American Petroleum Institute numbers, which are an industry report that comes out. They were showing about a 7 million barrel decline in crude inventories, which is a pretty sizable number. The market's really going to be focused on the government numbers that are expected out later today. They're expecting about a 1.85 million barrel decline. If we see sort of a correlation between those API and those EIA numbers, we could see prices move higher on that.
Christian Schmalinger, thank you so much for that.